Already in our previous session, we were discussing about what is meant by accounting, accounting definition, and then bookkeeping. So, what is the difference between bookkeeping and accounting? And then, what are the types of accounts? So, what are the types of accounts? Is that your personal account, real account, and the nominal account? And what are the golden rules of accounting? So, that is also a very important question. So next part we are moving on to the accounting cycle. So this one we will be dealing right from now. You will be seeing the problems, everything we will be discussing. So this is the basic thing which we must know. What are the steps involved? Company business their books of accounts, what are the procedures they have to carry out, or what are the steps or the stages they come across while preparing or maintaining their books of accounts. This is the accounting cycle. So the first foremost step is that journal. So this one only will be dealing first. Okay, so we will be recording all the transactions here. So we have to make necessary entries here. So this is the first part and first step in the accounting cycle. So you will be recording all the transactions. So there are large number of transactions daily happening to a business. So each transactions will be first recorded in the journal. So in the question they will be giving you the transactions. Per month transaction right from April 1st to 31st of April, 30th of April, like that. They'll be giving 1 month transactions, and each day some transactions would have happened for the business. They would have made a purchase, they would have made sales, or they would have paid some rent or interest they would have paid, or interest they would have received. There will be lot of transactions happening to your business. So usually in a question you will be given a month transactions, and you will be asked to pass the journal entries here. So this is the first step in your accounting cycle. So you'll be recording the transactions. So whatever we have discussed in the golden rules of accounting, debit and credit, all those things, so based upon the that you will be recording the transactions, and you will be having a format for that. So this we will discuss later on. So the journal means you are going to record daily transactions. So whatever taking place in the business, that you are going to record in the journal. And next step is that ledger. So here whatever the transactions recorded here, you're going to post the entries here. So that is known as ledger. So this is actually, this process is called journalizing, and this process is called posting. So if you are going to record the transactions in journal, that one is known as journalizing. And you're going to post the entries here, whatever recorded here, you're going to take that to the ledger. So that process is known as posting. So usually here what you will be doing is that you will be classifying into accounts. So you'll be preparing separate accounts. Okay, so take for example, if you are going to purchase a machinery, so here if you make a purchase, if you make purchase, machinery will come into your business, and cash will go out of the business. Okay, so for that you will be making in journal entry, you will be making. So machinery account data to cash account, that I will be teaching you later on. So machinery is coming in and cash is going out. So real account rule is what? Debit what comes in, and credit what goes out. So this is the real account rule. Okay, so if machinery is coming into business, then machinery account you have to debit, and cash is going out of the business. So cash you have to credit what goes out. So cash you will be crediting. So machinery account data to cash account will be just making, passing the entries in journal. Now in ledger what you will be doing is that separate a machinery account you have to open separately, and cash to open separately, and you'll be managing. So whatever whatever additionally you are purchasing or something, a lot of transactions will happen with respect to that. So everything will be opened a separate account, and you will be posting the entries, everything in ledger. Your journal. So day to day business transactions, daily business transactions will be recorded in journal. So after passing the entries, journal entries, you will be posting those entries in the ledger by preparing separate accounts. Okay, so even without a journal also you can pass the entries, ledger entries, but initially we'll be passing the journal entries, and then only we will be preparing the ledger accounts. So this is the first two stages in our accounting cycle. And next, moving on to the trial balance. So what you will be doing here is that you will be balancing all your accounts at the end of that particular month. Like that, you will be balancing the all the accounts, and just you will be next step is your trial balance. Now everything whatever shows here debit balance will be shown on the debit column, and whatever shown on the credit side balance, everything will be taken to the credit column, and that will be summarized. All your transactions will be summarized here, and trial balance will be prepared. So trial balance is prepared to know the arithmetic, just to find out whether any errors has happened or everything debit and credit column is getting balanced. So for that verification purpose, you are going to summarize all the transactions here, and that is known as the trial balance. So the first step, you are going to record the day-to-day transactions in journal, and after they will be giving only the transaction, you have to pass the journal entry, and after passing the journal entry you will put them all, and you will be posting the entries. So that place is known as ledger. So in ledger you will be preparing separate accounts, and you will be maintaining the account. At the end of that month or like that, you will be closing that account and finding out what balance it shows, actually debit balance or credit balance, like that you will be finding out here. And next, after that, from this information you will be preparing the trial balance, where debit credit column total gets balanced or not, you will be checking out that. So if not balanced, then suspense account will be opened. That all later on we can see. Okay, so why it is prepared is that before preparing the balance sheet, we have to check out the arithmetical accuracy, whether everything has been given in the proper place or not. Debit and credit column total gets tallied or not. Just we want to check out that. So for that purpose, trial balance is prepared by the company. Okay, and next stage is that preparation of adjusting entries. Even after trial balance is prepared, certain things like some outstandings will be there for the company, and closing stock at the end of the year. So that is known as closing stock. We will be telling that. So certain transactions, even before preparing the final balance sheet, after preparing the trial balance, something will happen in a business. So we have to pass necessary adjusting entries for that. So that is this place, preparation of adjusting entries. And the final last part of your accounting cycle is that preparation of final accounts. So final accounts, actually it is comprised of trading account, your profit and loss account, and the balance sheet. So why it is prepared is that trading account is prepared to know the gross profit of your business. Okay, gross profit or gross loss. And profit and loss account is prepared to find out net profit or net loss of the business. So ultimately, trading account and profit and loss account is prepared. Why it is prepared is that to check out whether the company is earning profit or they are incurring loss. Okay, so if your expenses are more and your revenue income is less, means then you ultimately will be getting a loss. In the same way, if you are earning if more income, more revenues there for your business, and expenses are quite very low for your business, means then you will be ultimately earning profit out of that. So to check out the profitability position of your business, so this trading account and profit and loss account is prepared by the company. So trading account actually deals with all the manufacturing related activities, expenses, all those things will come under trading account. Profit and loss account, generally your administration and other office expenses, all those things will come under the profit and loss account. And finally, you'll be preparing the balance sheet. So actually, it consists of two sides. One is the liabilities, and the other one is the assets. So liabilities means the company, if it has got some any short-term or long-term obligations. So if you take a loan from a bank, if you are running a company and if you are taking a bank loan or loan from some financial institutions, that thing everything will come under the liability side. Okay, so even for short term purpose also you may take a short term loan, or you might get goods or something raw materials on credit basis also. So those things are short term obligations or liabilities. So like that, liability sides, everything you will be putting out. And similarly on the asset side, asset means the property which you own in your business. Okay, so like the machinery you have in your business, furniture you have in your business, or the building, land, whatever you make investments. So all those things will come under the assets. That is your properties that you own for your business. So balance sheet actually what it shows is your financial position. So financial position on a particular date, usually at the end of the financial year. Your financial year will be 1st April to 31st of March. So 31st March, what is your position actually? So how much assets you own, how much liabilities you have to pay or incur, what is your actual position on that day. Every company and their stakeholders are interested to know. So for that purpose only, balance sheet, financial statements are prepared by the company. So this is the last stage of your accounting cycle. So right from journal, so it is not that every time you pass all the stages in your exams or the problems whichever you get. So it's not that everything you'll be crossing all these stages and go, but they will be giving you the transactions, and you'll be asked to pass the journal entries. So you can just stop with passing the journal entries. In some questions, they will be asking you to prepare ledger accounts. So in that case, if they tell you that pass journal entries and then prepare ledger, means you have to pass journal entries and prepare ledger accounts, or else you can even straight away prepare your ledger accounts. It is not there that a journal you have to pass and then only ledger you can prepare. It's not like that. Straight away you can go for the ledger accounts. You can prepare separate accounts. So probably your mind should think out of it which should be debited and which should be credited. You should know that clearly. If you know that clearly, you can straight away move to the even to the ledger accounts. And next step is your trial balance. So trial balance, they will be giving certain details to you. Okay, so which one comes under the debit column and which one comes under the credit column, if you are aware about that, trial balance is very easy for you to prepare actually. So rather than other thing, trial balance, preparation of trial balance is very very easy. It might be asked in part B like that, at times only part C like that they might ask. Part B only you will be having. So it's very easy for you to prepare actually trial balance. So you must be aware about which one comes under which column. You should know either debit or credit column. So sometimes you might be asked to prepare trial balance as well. So next, preparation of adjusting entries. This is not very much important for the PG level or something. So adjusting entries, most probably they will not be asked. Okay, so yeah, usually it will be asked in 11th till 12th. That range students only. So preparation of adjusting entries is again like a journal entry only. You have to pass the entries here also. Okay, few items will be given and you have to pass the adjusting entries for that. Okay, and the actual usually repeated questions coming in our university exams is preparation of final accounts. Okay, so sometime prepare final accounts they will be given in the question paper, or sometimes they will be giving you prepare trading account, profit and loss account, and balance sheet they might give. So anything, both are same only. Final accounts, if they ask also same. Trading account, profit and loss account, balance sheet, both are same only. So for that, what they will do, so they will be giving the trial balance to you. Trial balance they will be giving, and under that some adjustments they will be giving. Okay, so if they give this both together, you can prepare the final accounts. This is what the question paper will be there. Okay, and for the MBA PG level, you will not be getting most probably this journal, this ledger, all those things. They you will not be asked. Sometimes at times you might get a trial balance. That I'm not sure that much, but surely you will be having one question from your unit one from this preparation of final accounts. But anyhow, initially you need to know about the basics you must know. So for that purpose only we'll be discussing each thing, how to pass the journal entry and how to prepare ledger accounts and how to prepare trial balance. Everything will be going step by step, and lastly we'll be going to this final accounts preparation. Okay, but the exam point of view, you will be asked only this, for which they will be giving trial balance, and under that adjustments they will give you. You have to prepare the final accounts. So this is the usual important question asked from the unit 1. So this is the accounting cycle. So accounting cycle is the step by step procedures or the stages that you come across in each and every business. So particularly if they want to maintain their books of accounts, what are the usual process they have to undergo in a business. So these are the steps involved, there are the procedures, steps involved, or the stages, whatever might be. So this is your accounting cycle.